making 200% selling short strangles. That's what we're going to see today. We're going to react to a Rising Star video. You know that I like to react to Tastytrade videos. I think there's always a lot of information in there. So hopefully we're going to have some good bits of information, and without waiting, let's get into it.
Shining star, no matter who you are, shining bright to see.
Thomas, my friend, we're back. Rising Star.
I'm very excited to be back. Sherman, how are you?
Good. How are you?
I'm feeling great. I'm excited you're here. We probably
You got the S&P's down 7. That's something we haven't been able to see in days.
That
so
hasn't happened in a long time.
take full credit for it. Run with it.
Well,
Good job.
I think we met about I don't know, maybe 3 years ago or something.
Yeah, right around that.
And I think you're Chicago based. Can you throw up on the screen, Beth, the little background? Yeah. There you go. Give a little info on you so people can see it. You stopped by the office and you had a bunch of questions about trading, and it was like you're somebody that I remembered, because we have a million people that come by the office, but I remembered you because you were like, I remember the first thing you said is, you talked to Tony and myself. You said, "I love this business." You're like,
I still do.
I want to do that, and you were like, "This is my passion. I love this, and some point I'm going to be a rising star." That's
I
what you
did
told
say
me.
that.
Yeah,
And I'm here today, so I'm man of my word.
there you
yes.
go. I love it. I love it. You work full time.
Correct.
And so the nice thing about that is we like people on here that work full time, because I think it's important that people know that there's both sides, people that trade full time, people that work full time.
I think it's really, really important to understand that, you don't have to do this full time. And actually, when you work full time, which I do, and you actually trade on the side, like you trade options, there's a really good benefit to it. You don't have the pressure of having, for example, to take out money from your trading account because you have to live off of it. And that's really what I feel is misunderstood in general. Like, the dream of like trading full time is obviously very cool, of course, but working full time and trading options on the side is also a very nice thing, because you can really build that compound effect. And if you keep on putting more money into your account over, let's say, 10 years, and you just work full time for 10 years, you can really achieve some amazing things.
When did you start not like investing? How old are you right now?
34.
34.
Just
so
turned 34.
When did you start kind of like actively trading?
Well, so like everybody else, I started with buying stock and hoping that it would go up. But you know how that works. 50% of the time you're right, 50% you're wrong. So then it wasn't aggressive enough for me. So then I started buying calls, because then the profits are not linear if the stock goes up. And then again, I would win some, lose some. Then I came across that Karen video, and then I watched a documentary on YouTube about the Black-Scholes method, taking risk against risk and all that. So then I kind of got obsessed with it. I watched that video 100 times. So then I just kind of read up on it, read a bunch of books, watched market measures, and then I started trading the Tastytrade way. But what happened was the worst thing that could happen to a young, inexperienced trader, which is I made a lot of money right when I started.
Yeah.
I do agree with him that it's probably the worst thing that can happen to someone that's starting out. As much as we can think that it's like losing money with the worst thing. No, I think the worst thing that could happen to someone who's just starting out is making a lot of money very quickly, because after that you get overconfident, and sooner or later, the market is going to catch up with you and you're going to lose a ton. And I'm really happy that when I started out, I didn't have like big wins all of a sudden. Like, it really took a long time for me to start coming out of the water and start making consistent money. But it wasn't like a good start. It wasn't a crazy start for me, and I'm really happy that it didn't go like super well for me, because otherwise I would have been overconfident and I would have done probably a lot of mistakes, like trading too big. And I bet that what he's going to say right now is about trading too big, because that's usually what happens once you get overconfident.
So that's when I got aggressive. And my size got too big.
Exactly.
And then, there was a bad day.
The market always teaches you a lesson when that happens.
It absolutely does.
Yeah.
So when that happened, I didn't know how to manage or roll.
Yeah.
I would just I would just sell all these puts, and I would think to myself that, okay, well, this is way out of the money. It's not going to happen. I would look at the probability, meaning the money would be way too low, and I'd be like, I'm safe. Then that happened, and that's when I realized just how important size is. And to this day, I think that's the most important thing.
I often say this in my videos, but you can make like any mistake that you want when you trade options or when you trade stocks. You can buy the wrong stock, you can trade the wrong expiration, or you can trade the wrong strike. But if you trade too big and it goes against you, like that's probably the only mistake that you won't be able to come back from, because once your money is gone, it's gone. Like you cannot just cancel your order, you can't go back to the last save and just load the last save. That's when it's done, it's done.
I got a couple of emails from you over the years, and I remember one email, you were very distressed on size, and you were like, I'm just not sure, like you had they were very normal questions. They were obviously important questions to you. They were very normal questions that we get all the time. And I still remember it because you were like, very concerned. But your education was it says on there in electrical and computer engineering. And that's
just electrical engineering.
Electrical engineering. Yeah. Okay. And that's what you're still doing.
Correct.
That's cool.
Yeah. I mean, I work full-time job.
Right. And so but trading, we have a lot of, I would call them engineers. So lots of different kinds of engineers. But I'd say
somebody with a math background who has embraced numbers, right? I mean,
what I'm getting at is the mechanical aspect. The transition from an engineering background to a very mechanical trading kind of sequence of events, the way you trade. Yeah. That was probably the easy part. The hard part was ego, discipline, dealing with losses, dealing with profits, as you mentioned.
Yeah, absolutely. And I've taken statistics in school, which is a major part of this game.
Yeah.
The Tastytrade way, at least,
Options are about statistics. Like, it's really only about statistics. For example, the thing that always amazes me, and, especially when I started out, I couldn't believe it. If you sell an option that has a delta of 5, well, you can associate the delta to the probability of profit. So if you sell an option that has a delta of 5, you can know for sure, for a fact, that if you keep selling options with a delta of 5, then you will have a 95% probability of profit over time. Like, you will have 95% win rate. Doesn't mean that you'll make money at the end of the day, don't get me wrong. Like, you could still lose money if you have like one huge loss, but on the paper the win rate will be 95%, and you can really choose your win rate and how often you want to be right or wrong.
So that wasn't that hard, but like you said, the ego, and when I first started, like I said, I made a lot of money, and I thought that I could be the next Karen. So I was just taking crazy risk, and but then I learned my lesson, and I made a few adjustments, and the only reason why I never gave up. I mean, there were times where my parents have begged me to stop. The only reason why I never stopped is because I would look back every time, and I would see the mistake that I had made. That's the most important thing.
Yeah.
If you make a mistake, if something bad happens, whether it's in trading or whatever else, and you look back and you have no idea what happened, that's when probably you should maybe consider other things. But when it comes to trading, I always knew that I had made a mistake, because then I would watch market measures, and you would talk about rolling and fixing trades, and then I'd be like, well, if I had some buying power, I could have perhaps rolled that bad put, and I could have fixed it.
Yeah.
So that's for that reason I never gave up, because, like I said, I always find myself responsible.
That's one of the most important things about what we do is we put the onus of success on you, because all we can do is create enough research and create the mechanics to essentially say, hey, the reason, most people think the reason they're not successful in investing is because they just, they picked the wrong thing. And like you said, that's a 50-50 shot. What we're trying to do is something completely different, which is to allow you to assess, hey, this is why it worked, this is why it didn't work.
Yeah.
Absolutely. And he just mentioned about watching market measures. If I have one tip to give, watch as many market measures as you can. Market measures is basically their show where they do the research and then they present it, and they're going to analyze strategies. How much are you going to make over time? Like, especially, for example, during a crash, how much allocation you need to have, like all this type of research that is extremely insightful.
So let's fast forward now to maybe about around 2 years ago.
Yeah.
Let's talk first of all about your approach to trading strategically. Like, what kind of strategies do you employ the most? What kind of underlyings do you use? And we'll start with that.
Yeah. So what makes the most sense to me is strangles, just the odds. I'm not a big fan of defined risk trades. And when I say this, people think I'm crazy when I say, when they ask me and I say, well, theoretically the risk is undefined. But with strangles, it's just the thing that's worked for me, and that's what I really do. Like I said, I watched the Karen video. So I do a lot of the indexes, the Russell, S&P, NASDAQ. But those they take a lot of buying power.
Right.
So what I have transitioned over the past 2 years or so, I still do some indexes, but I'm saving that for the future when I have millions of dollars in the account. For now, I do earning trades, and I never pick a direction. I don't believe in that because every time I've been wrong. It's supposed to be 50-50, but I've been 100% wrong. So I never pick a direction. And I always put on strangles. And I do it pretty conservatively because, with strangles, if you get it wrong, you're really
conservatively
wrong.
Meaning what? Delta?
5 delta.
5 delta.
Yeah.
Okay, so what I just talked about before, about, for example, if you sell an option at the 5 delta, well, that's exactly what he's saying. If he's selling a short strangle, so for those who don't know, when you sell a short strangle, you sell a put and a call at the same time. So essentially, you bet that the stock is staying within your chosen range. And because he's selling a 5 delta put and a 5 delta call, then he has a 95% probability overall to be right. So he's right 95% of the time because he's selling 5 delta puts and 5 delta calls. After that, it's about how you manage losses, because it doesn't really matter how often you're right. What really does matter is when you have losses, what is your P&L at the end of the day? Like, what is the bottom line of all of this? Because it's very misleading. People usually think that because, you're right all the time, like you're right 95% of the time, then it means that you're making money. What matters more is when you have a loss, is it offsetting all the wins that you previously had? That's really the question.
So you're way out there.
I'm way out there, and I stick with, let me put it this way. I have found something that works.
Yeah.
I have found the cow that I've been milking. It works, and I'm sticking to it.
That's okay.
So I stick with high dollar stocks.
Okay.
Like Priceline, Google, Amazon, and I put on the trade right before the bell, and honestly, 95% of the time, within 10 minutes of market open, I'm out.
That's normal because he's selling 5 delta. So as I said before, if you're selling a 5 delta option, then you have 95% probability of being right. One thing to mention is that he's saying that he sticks to high dollar stocks like Google, I guess Amazon, and all those stock very expensive. Most of people, and me included, at least when I saw it, I couldn't afford going for this type of stock. If you don't have a huge capital, please don't go for these expensive stocks. Go for cheaper stocks. If you want to trade earnings like the way he's doing, or like, I usually do the same when I trade earnings, go for cheaper stocks. And I made videos on the subject on how I trade earnings. I'll put the link of one of those videos in the description so you can see my full methodology, but don't go for expensive stocks if you don't have the capital for that.
So what are your risks? Let's talk about how you handle situations that don't go your way.
Yeah.
So let's say you put one of these positions on, or any position, because I'm not a fan of just doing earnings trades. I like, obviously a lot more.
Yeah.
How many trades do you usually have on at once, and what is your approach to managing risk when things don't move your way?
Yeah, so I'm obviously a lot busier during earnings season than, in between earnings. On any given day, maybe 3-4. But I always make sure that 50% of my buying power is free in case I have to manage.
If he's only having 3 or 4 trades at any given time in his portfolio, but like it takes, like, as he says, like basically half of his capital, I think personally he's over leveraged. I don't know, but let's continue to just see what he's going to say.
And very rarely, and I say that very proudly, very rarely when trades don't go my way. Because like I said, I look at the expected move, and I round that up. I look at there's also another website that I use that tells me what historically what the stock has done, and I go beyond that as well. But sometimes it happens.
Sure. So what do you do?
I roll. I move the untested.
You roll out in time. Or
Correct.
you roll up the untested side.
I mean, I do what
Okay,
what I've learned from you guys. I move the untested side. So if it drops, I bring the call down. If it goes up, I bring the put up, and I roll out.
It's perfect.
And I scratched that Nvidia trade that I was trading.
It's a miracle.
I mean,
I wish I did. So do you make sure that you trade every day at least?
Yeah, I do. I mean, every day I'm either taking. Another key thing that I'm sticking with is taking profit. Right around that 50%.
Sure.
I maintain, I think he's over leveraged, and I think it's dangerous to sell 5 delta strangles, because when it goes wrong, are the losses going to offset all the small winners that he's had before? And and I saw in the first slide that they showed that he basically made 200% over 1 or 2 years or something like this. If he's making 200%, only having 4 trades at any given time, especially selling strangles are so far out the money, then he's probably selling a lot of contracts to make, a big credit, to make a big profit. I think he's over leveraged. Let me know what you think in the comment section, but I think it's too risky the way he trades. I'd rather trade smaller on different underlyings, but I think he's trading too big.
But you force yourself to constantly stay engaged.
Absolutely.
Yeah.
I mean, it pays. So as long as I'm getting paid, I'm going to get engaged.
You're interested.
On the screen here, it says that you're up over 200% the last 2 years combined.
Correct, 200%.
That's pretty amazing. But what did you do? What was the change? Just you kind of tightened up your mechanics. What's the change from the last 2 years? I found 2016 to be a great trading year and 2017 to be ridiculously hard. Yeah. What did you do in what was the big change that you made? Was it just going to a smaller delta, or was it, you tell me?
Well, so there's 2 things that are extremely important. And I used to, when I first started, I was aggressive. I used to be like, oh, Tom Sosnoff, he's conservative. But I learned over time that what you say is something that everybody should stick with, which is size, keeping your size in check, and taking profits at around 50%. So I stick with those. Bringing my size down is probably the most important thing that I've done.
It's amazing, isn't it?
It absolutely is, because then you're able to. I mean, we got 2 kinds of trades. You got the good trades and the bad trades. We don't need to discuss good trades. Bad trades, if you have buying power and you give yourself time and you manage those, then you're only left with good trades.
It's the only defense that it's the only defense. It's so funny that because we never thought about this either. We grew up in an era where size was everything. Whoever traded the biggest was the best.
Yeah.
But what we didn't realize was, that's the real killer. That's when we always say that's when genius fails.
It absolutely. I mean, I learned the hard way. I've had margin calls. They've called me. They said, hey, you have to take the loss or or bring more money in. So you asked what changed that for me. Just making sure that 50% of my buying power was free, just so if I need to roll and manage. Another tasty trade thing that I actually do, you guys talk about cost basis reduction here a lot too.
Of course.
And so, I sold some puts to finance some long calls, just if the market was to bounce, and it did. So I did that. I sold some puts, and it was a great week for me.
Smart, honestly. Selling some short puts, so you're going to collect the credit, and then after that you're going to buy some long calls using the credit that you received from the short legs. That's smart, honestly. I've never done this personally. Let me know if you've all done this in the past or something, but that's really smart.
Although I do have one earning trade that hasn't gone my way. Bat Junior has that trade on too.
Which one is it?
Netflix.
Oh,
yeah.
Yeah, Netflix has just been up.
It's had a brutal rally the last couple of days.
Yeah, but it's fine. I'll.
You'll work your way out.
Yeah, I'll work.
See, that's a certain level of confidence that very few people have, by the way, is that you have a bad trade on, you're like, okay, I'll work my way out.
You have to have some level of success to kind of get
course.
to that. Otherwise, right?
Of course.
Like, I absolutely agree with this. Like for me, I needed like a good amount of success, whatever we call it. Like to be able to be confident. Like when I have a bad trade, like I'll take care of it. It's not it's not the end of the world. Like compared to the first time when you have a bad trade, at first you're just freaking out because you've never had experience before managing a bad trade and then turning it into a winning trade. So you just need a bit of time. You just need some experience, like of turning bad trades into good trades, to be able to have this confidence that when you have a bad trade, you're just going to be like, okay, I'll just manage it. It's fine.
And, I just don't have the buying power to put on like a, 10 contract trade in the S&P.
Yeah, it's expensive.
Yeah, but that's what I'll be, I mean, I guess I could do the spies,
Yeah, sure.
But I'll be moving more towards that.
So the thought process there is that if you are trading individual equities, that's better for a low volatility market because you find some situations with higher volatility. But if you're trading the indexes, most people gravitate towards the indexes when volatility gets higher, like it is now, because you take significantly less risk and you get the same width you're looking for.
But I hope that you enjoyed it. Please let me know if you have any questions or any comments down below. Please make good and informed decisions. I'll see you in the next video. And in the meantime, I wish you all the best.